Hey YouTube family, it's Dinko the Realtor. The housing market is under absolute fire and it is not good. The 30-year fixed mortgage rate just hit 8% for the first time since 2000 as treasury yields soar. And if you've been following along, watching previous videos, the 10-year treasury is really what kind of lets us compare apples to apples when it comes to interest rates. When the 10-year goes up, interest rates go up. And let me show y'all that real quick. Look at the 10-year right here. I want to show y'all the 5-year. So this is during the pandemic when money was free, and that's why we saw the pandemic boom plus all the stimulus money. And right here is when it started going up, and we saw it wreak havoc, those high interest rates, in the second half of 2022. Well, now we're having that happen again here. You know, it let up a little bit when Silicon Valley Bank collapsed, which, I mean, a bank collapsing should not be a good thing for the economy, but I guess it is. Just shows you how stupid everything is in the economy. It doesn't make sense. And this bubble, potentially, if it does burst, it's just getting bigger and bigger. So right here, if we analyze this, look at this right here. Let me actually go back to the 1 year. Right here, the 10-year dropped and interest rates actually went down. Why? Because of the conflict in Israel. Even though the inflation report's coming out, the job market is still, just spitting out jobs. And that's actually not a good thing because, well, the Fed wants to tame inflation. And if jobs openings are above expected numbers, that should actually make the 10-year go up and make interest rates go up. But they said, you know what, now with the Israel conflict, there's no way the Fed's going to do it. Then wholesale data came out and that increased. So inflation is not tamed at all. And they said, oh, the Fed has to be done. They can't be raising stuff. And finally, we had retail data come out, and that was 0.7% higher than the expected 0.3% higher in September. And finally, they were like, oh, wow, nothing is under control in inflation. I don't think the Fed is going to be able to really let up on these rates. And the 10-year started going back up. And if it wasn't for that conflict, we actually would probably have that 10-year above 5%. And the interest rates wouldn't only be 8%, they would probably be hovering towards the 8.5% average. Now, also keep in mind, let me show y'all the graph right here. So look at the interest rates, right? These are the interest rates that we're seeing right now. And look at this just skyrocketing. This is not good news. I am having builders discounting their inventory severely. I'm getting emails, I'm getting texts, I'm seeing it happen. I've helped buyers get big discounts, the ones that don't want to wait to see how this thing's gonna unravel and how everybody's timeline is different. And remember, Dinko the Realtor has your back anywhere in Utah. Look, smash that like button, help me get this video in front of more people. Subscribe if you haven't, hit that bell so you're notified when new videos drop. But I've helped people get big discounts after there was already big price drops. And there are realtors out there that don't know how to negotiate. And over 1/3 of the realtors right now have only been in real estate during the pandemic years. So maybe a good vast majority of them do not understand the housing market prior to the pandemic. You don't have to overpay. You don't have to overbid. And if you watch the previous videos, I'll show you. I'll put one at the end of the video here. The one that shows that buys are negative 40%. So if we take a look from the pandemic of 2021, which actually wasn't even the best-selling year, and we compare it to 2023, the buys have fallen by 40%. And buyers just keep abandoning the housing market. Of course they are. Look at these interest rates. And that is not available to everybody. Let's go to Google over here. So right here, we see that the interest rates, Google is showing over 8%. But let's say your credit score is 700. All of a sudden, that interest rate jumps up because your credit score, the higher it is, the better interest rate that you get. So you don't even have that interest rate available, that 8%. You're going to have a good chunk of the population that is going to be getting even above 8% into that 8.5 percentile. I mean, these interest rates could potentially cause the first domino to fall. And this might be the first time that housing actually causes the first recession. I mean, I've been saying this throughout my videos. The Fed is between a rock and a hard place. They keep increasing interest rates. This bubble just builds bigger and bigger, and housing might potentially be the first domino to fall. Now, how severe is this recession going to be? And that's why I've been following these numbers, saying wait until the end of the year because it's mimicking what happened last year when we saw prices drop upwards of 15%. So if you don't want to wait long term to see how this thing unravels, October, November, December, especially November and December, are going to give you the best buying months in 2023. And then of course, if unemployment goes up, then we know prices are most likely going to continue dropping, as that will probably indicate we are in a recession, and we will see the car loans that are overvalued, all of that crazy stuff that's going on, the tech bubble. There's a lot of stuff unraveling in the economy. So anyways, let's go back over here. I'm going to share some stuff here with y'all, and that way you guys can have a very, very good idea of what's going on. So right here, they even finally state, look, higher mortgage rates have caused applications to plummet. So not only are applications plummeting, but also the buys are plummeting. And if applications are plummeting, well, that means that those buys are just going to keep going down every single month. And we're going to be at worse comparisons when we're comparing year over year, and especially when we're comparing to 2021. Because remember, the second half of 2022 was not a good year. So comparing to that second half is not, it's not a really good comparable, because it was under fire, and not in a good way, just like we are right now. So there's just so much unraveling here. I mean, look at this right here. This article is, and right now we actually hit so we hit actually over 4.9. I think that the 10-year hit 4.92 or 4.93 today. And right here, we see that the treasury yield tops 4.8% after hot retail sales data. So this is finally, like I've been saying, all of this inflation was coming out and saying, hey, the inflation in the economy is not tamed. And finally, this was the report that told the investors, that told the stock market, that told, everybody, saying, hey, the Fed can't be done. And the wholesale data, retail data, jobs coming out. And this one was finally the nail in the coffin, even with the conflict that's going on in Israel. They're saying, okay, the Fed is really not going to be able to let up. And right here, I want to show y'all what that means for a payment. I mean, let's just actually go to that best credit score and get that. So we're going to go calculate the monthly payment here on Google. And let's see here, loan amount, let's include taxes and fees, and home price, $300,000. It'd be nice if there was actually something, if there was a single family home, $300,000 in the greater Salt Lake area, and there really isn't, unless it needs a whole lot of work, or unless it's really, really far from downtown. And again, it'll probably need work. And we are going to see a reset. I mean, what was that? Over a year ago, June was my first video. I literally laid out all of these different scenarios that the market could play out. And I did say, we are 100% going to see some sort of correction. And that correction could be anywhere from 10 to 30%. And if we do see a severe, severe recession, something that resembles the Great Recession or resembles the Great Depression, we could see prices being corrected by even upwards of 30 to 50%, which would be a full-out housing crash. The 10 to 30%, 20 to 30 is still going to actually be a pretty good housing crash, but just because of how overinflated everything has gotten, that would just be probably considered more of a severe, severe correction, and really, it would be a mini crash. So let's calculate this. Home price, we're going to put $500,000, and I am seeing prices dropping big time. I'm seeing that domino effect happening, where in the locations where home prices tend to be higher, they're having a hard time selling. They're dropping their prices, which now is making people buy those homes that are in those locations that are more desirable. They're location in real estate, right? And it is trending into the other direction, where we're seeing houses just sitting on the market. 27% of homes are on the market 100 plus days, seeing massive price drops, and still they're not selling. The prices, what the median price is stating that it is right now, that is not the true median price. That's what I believe, because if you follow the data, the free basements that builders are giving, the free incentives, the buy down rates, none of that gets actually calculated into the sold price. So this thing, I'm seeing, I've helped people knock off prices $50, $100,000+ off of what the list price was, because these homes were sitting on the market and they couldn't get sold. So don't let anybody tell you otherwise. Right here, we have $500,000, and 100,000 people don't just have that kind of money just laying around. And really, you have your FHA, which is 3.5% down, and 5% for your conventional loan. Those are the two most used loans. Those are the Fannie and Freddie backed loans. And what we're going to do is we're going to take a look at what we can see here as far as the monthly payment. And okay, we'll just leave it at that 7 to 720, because not everybody's going to have that above 740 credit score. So at least half the buyers. Now let's just see how bad this thing gets. Property taxes, thank God, they're not that bad here in Utah. So that is something that helps also, unfortunately, home prices to appreciate. Home insurance is also not bad here. So that's also something that helps home prices appreciate, because majority of your monthly payment and what you're actually spending your money on when it comes to the house is actually going to the house. So that is something that helps us see those appreciation values. Now, $500,000 with a $50,000 down payment, so 10% down with a 8.6% interest rate, we are seeing that monthly payment at right here, $4,036. I mean, your loan is $3,513 and your taxes and fees are $523. Now imagine cities and states where they have high property taxes like Austin, Texas. That's a market that is really, really under fire right now, really not in a good spot. And they tend to kind of be hit right before Salt Lake because they have a little bit more stress on their market. And they were one of the worst performing markets last year. Oh, and we were not too far behind. So that kind of tells you what's going on here. These prices, in my opinion, are just not sustainable. We're seeing the prices drop. I'm helping buyers get those prices. And if you wait until the end of the year, if you're looking to do something in the short run, that will present a good opportunity. And then, of course, if this thing unravels, we see a recession, of course, home prices could go in further and further down, which if we do see a recession, my belief is would happen. Now, let's actually say that there is the best credit score that you can have, right? We still see that that payment is $3,853. I mean, how many people can afford that? There's no, wonder why Moody's came out and said that 97% of America is considered overvalued, where the average income can't support the average price. So I guess all of America now is California. Oh, and I guess they all have California jobs to support those prices. I mean, this has just gone bonkers. And the amount of money that's been printed out into the economy, all of this inflation, all of this growth, a lot of it is also fake growth because money, when we went away from the gold standard, and maybe I'll make a video on this. And look, I'm going to also put a video somewhere on the screen. It's going to be my first time. It's probably going to be down here. I'm going to put that video of where it shows you that the buyers are just not buying the homes. They're negative 40%. So the buyers are just abandoning the market. Make sure that you subscribe, follow the video so you're up to date on the Utah housing market.